Hey guys, Coach Julien here. In this video, I'm going to talk to you about some investments that beginner investors can do, and also people who just don't have the time to track stocks, buy and sell, and just don't have the energy, the time, and don't want to be bothered with choosing and selecting and trading and all that. So in this video, I'm going to talk about 3 investments. They're ETFs, exchange traded funds, that are extremely diversified. They follow the American economy. So leave me your questions and comments, and hope you enjoy. Hi, I'm Julien Regoli, CPA CMA, your finance coach. So I simplify financial concepts so that people can start investing and start building wealth confidently. It's not that complicated. You just have to understand certain concepts and have the discipline to apply them, and you can be well on your way to financial freedom. Listen, this is the kind of topic that interests you. Subscribe to my channel, hit the bell button, you'll be notified whenever I upload new content. So as the American economy does well, so will these ETFs. Very diversified, low cost, and basically a headache-free way to invest money. And there's 1 in US dollar and 2 in Canadian dollars. Okay guys, so the first one is VOO. This is a US investment, Vanguard S&P 500 ETF. All the investments that I'm going to go through today are ETF, exchange traded funds. They basically mirror the S&P 500. So what that means is it will follow the performance of the S&P 500, which is an index made up of 500 of the most successful and largest companies in the United States. So 500, so you're well diversified. VOO, it's really a giant. The size of assets under management is 280 billion. It's got a really low expense ratio. So that's basically how much it costs to manage this fund. It's almost 0.03%. So that's nothing. It has a bit of a dividend, 1.34%. I recommend for you, those of you who don't need that dividend right away, if you're not close to retirement, you're still working and you're still saving and all that, that dividend should be reinvested through a dividend reinvestment plan, a DRIP. I have a video on DRIPs. I'll flash it on the top right of your screen. Take a look at that after you watch this video. If you need help to get set up, you're not sure, you're still not sure, you have some questions, you want to bounce some ideas, book a one-on-one with me. There's a link to my Calendly in the description of the video. The next one is BMO S&P 500 ETF. It's in Canadian dollar. The ticker is ZSP.TO. This one follows the S&P 500. Note that when you do buy this one, you'll be exposed to the US dollar. So if the US dollar goes up, you buy this and the US dollar goes up, you're going to benefit. But if the US dollar goes down, you're gonna be affected as well. So just note that this is a play into the S&P 500, but also your US dollar exposed. You can see that it has almost $14 billion of assets under management. The expense ratio is 0.09. So that's a fraction of what a mutual fund would cost you, or what a portfolio managers will charge you 0.5%, 1%, 1.5%, so look, this is a fraction of that, and you have access to a really well diversified investment. This one generates dividend yield of 1.23%. Guys, before I get to the next one, feel free to download my step-by-step guide for beginner do-it-yourself investors. It's a guide that will talk you through how to get started. And the most important thing is to get started right away. Don't delay. The earlier you start, the earlier you can be financially independent. In this guide, I'm going to explain to you how you can set stuff on autopilot. So you'll find the link to download that in the description of the video. The next ETF is XSP.TO. That's the ticker. It's the iShares Core S&P 500 ETF. Now, the difference between this one and ZSP is that this one is hedged. So basically, this will follow the S&P 500 performance regardless of what the US dollar does. So if the US dollar goes up, that doesn't matter. You won't be affected with this. If it goes down, you won't be affected. So If you're unsure, you don't know what to choose from, is it ZSP, is it XSP, you could buy a bit of both. What you should do is dollar cost average in these. So every paycheck, you put aside some money, you transfer it to your direct brokerage account, and then you invest that in this kind of index. It's headache free. You don't really need to time buying and selling. You don't need to track, any specific stock. Look, as long as you believe in the American economy, then this is a good play for you, good long term. And you'll see, on average, the S&P 500 has done over 10% per year return. In the last 30 years, the average 10%. Where are you going to get that now? I'm not saying that the future will be exactly like the past, but if you do believe in the American economy, this is an excellent play. Cheap, diversified, and pretty easy to understand. Guys, thanks for watching today, and we'll see you real soon.